Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance, and no cap on existing investment portfolio size. Plus, personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone, and welcome to another episode of the Smart Property Investment Show. Maya here with you today, the editor of Smart Property Investment. Joining me today is Jyh Koa. Jyh, welcome to the show.
Thanks, Maya. Thanks so much for having me on. This has been one of a regular podcast that I've been usually listening to when it comes to property investing, and has really helped me along my journey in the last couple of years. So thank you.
That's really good to hear. And, before we sort of used to do these, or Phil used to insist on doing these podcasts in the studio, but then obviously COVID hit, 15 months ago. And now we're sort of able to talk to people throughout Australia via Zoom, which is pretty amazing. But you yourself are in the Northern Beaches in Sydney. So both of us in lockdown at the moment, unfortunately. How are you handling it?
Yeah, unfortunately, things could be worse. I think very grateful that I'm not far from the water. Being in the Northern Beaches, still able to get out and go for a walk during the day and see the nice blue sea. So I think I'm feeling quite grateful for that. But, hopefully looking forward to get out of this lockdown as quickly as possible.
For sure. And we're sort of lucky with the weather. It hasn't been sort of too bad. It's been a bit windy, a bit rainy, but pretty warm winter, which I'm sure Gladys is not too happy about with, people out and about walking along the beach coast. And so tell me about yourself a little bit. Sort of let's start with your age, actually, because you look quite young to me. I guess our listeners can't quite see you, but
Yeah, so I turned 32 years old this year. My family background is first generation migrants from Taiwan. So I was born in Taiwan. I came to Australia when I was 11 months. So I pretty much grew up in Australia. We grew up in the Northern Beaches. So my parents' first property they bought here was in DY. So we lived there for many years, and we moved to Freshwater after that. And I guess as a kid, when I was growing up, I started to get a concept of money, seeing how my parents, how hardworking they were kind of coming into Australia, because their English was quite poor. And also money wasn't really, we didn't come from wealth. So I knew money was quite hard. And just seeing the firsthand experience of how hard my parents were working, I placed quite a big value on money. And I guess throughout my childhood and kind of into my early teenage years, I was really focused on working hard to make sure that I wouldn't be in a similar situation where, money was really hard and I was, able to create a better wealth story, I guess, in the long term.
Exactly. And it's very lucky that you guys sort of are Northern Beaches. It's a very, very nice spot to base yourself from. So from what I've heard, you have managed to build a 2.5 million property investment portfolio, which that is quite impressive for someone as young as yourself. So when did you sort of get started in property? When did you buy your first property? Tell me a little bit about that sort of process and journey.
Yeah, sure. So first property started in 2013. So that was a purchase of a one-bedroom apartment in North Sydney. Bought that one for $428,000. Now, how that all started really was when I started working full-time in corporate marketing. That was my first full-time job. I started working for about 2 to 3 years, and then I realized, I need to look at ways of building wealth a little bit faster, because throughout I guess all of my working life, I started working quite young when I was 15 years old in casual jobs. And throughout that time, what I realized was saving money took a long time. No matter how many jobs I had or how much, I was earning. And at the time, I wasn't earning that much. I remember my first job I ever got from McDonald's was $6.13 an hour.
Yeah, McDonald's was always the worst pay.
I remember very clearly, that was my hourly wage. And I was flipping, 10 to 12 burgers in the space of a couple of minutes that were selling for a couple of dollars each. Yeah. So that concept for me was really eye-opening, because I was like, okay, well, if I'm earning $6 an hour, but businesses are out there making this much money in the space of minutes, there's got to be a faster way of building wealth and creating wealth, right? So when I started working full time, I was quite intrigued by the world of investing. And I think, a lot of people around me at work, particularly colleagues who had been working there for a little bit longer, having conversations with them, you could tell that they had some wealth built up in their own property and also through other methods of investing. And so I really wanted to learn, and they became my circle of influence. And that was when I started talking to colleagues, and they were saying, oh, you should definitely get into the property market. And I think at the time, 2013, that's when Sydney was going through quite a big boom and growth phase for a couple of years. And by then I had, was earning around $70,000 at the time on my full-time salary. And I thought, okay, well, I'll go have a chat to a bank or a broker and see how much I can borrow. And yeah, pleasingly, I was able to borrow around that 450 to 500K mark. And so I thought, okay, well, this is a good stepping stone for me to get into property. So from then I decided to buy a property in North Sydney. Now, you're probably wondering why I picked North Sydney. At the time, I didn't know too much about where to buy or anything about property. I hadn't done much research. All I knew was, I think longer term, this area will do well because it's not far from the CBD. It's got good employment hubs. It's got a lot of people living there in terms of residents. I was just thinking longer term, it can't really go wrong. And the rental yield at the time in that area was pretty decent for apartments, and it was able to cover most of my repayments. So that was my first stepping stone for my initial property.
Wow. So you were, 23 years old at the time?
Yeah, 23, 24 years old, yeah.
Oh,
yeah.
Wow. So tell me, you did that process all on your own? So you sort of, even back then, knew what to look for in terms of rental yields and that sort of thing? Like you did your own analysis, your own research?
Oh, it's very good that you asked that. I hadn't known any of that at the stage. I didn't even know what rental yield was. I was just doing some quick maths.
Lucky dib.
Yeah, just looking at, okay, well, if this property's going to cost me $428,000, if this is what the mortgage repayments are, this is the rent. I didn't really know too much about the strata expenses and all the ongoing expenses. They kind of came later on, and I discovered that as I was going through the journey. But in terms of research done, honestly, at the time, I had zero knowledge. All I knew was I had a will to get into the property market, and I wanted to buy somewhere that I knew. I wish in hindsight I would have done a little bit more research to look at other markets, but that was the first property. And I hadn't looked at too many, to be honest. I just went to a couple of open inspections and bought off what I personally liked.
Yeah. And tell me sort of about that apartment now, obviously. Do you still have that apartment? Is that still?
Yeah, I still have that apartment. Yeah. So I haven't sold any of my properties.
Oh, wow. Well, tell me about that one, obviously being in North Sydney. So our company is based in North Sydney. So I know that area has been sort of impacted, obviously, by COVID, and it just obviously there aren't too many people sort of walking through North Sydney at the moment. But tell me, how has that performed for you over sort of what has it been now? You said 9 years, yeah?
Yes, I think I got pretty lucky, to be honest. When I bought at the time, it was on the cusp of a Sydney boom. And 2 years later, I was able to revalue the property for a lot higher. Oh, and what I realized was you could tap into the equity and use that equity to buy the next property, which I had never known about initially. And I guess I never had the intention of building a property portfolio. It became kind of by chance later on when I started talking to more trusted advisors and mortgage brokers. So yeah, after when I bought that property, I didn't live in it. I continued living at home for a long time. So I moved out.
Oh, wow. So you had that. You were sort of lucky. I was going to ask you, how did you sort of go about saving for a deposit? But I guess that was, lucky circumstance.
Yeah, 100%. So I think, I took advantage of being able to rent vest at home for as long as I could and live at home and really free up some cash flow and increase my savings as much as possible. So I'm really grateful for that. And all that time, I was just basically saving hard to get that first deposit, and then got lucky with the timing. So 2 years later, did a revaluation on the property, and I think, bought it at 428. And at the time, I think it went up to close to 600,000.
Oh, wow.
And I was able to draw some equity out of that property, which then became the deposit for my second purchase in 2016, which I bought a house in Wynnum, so in Queensland.
Okay, so you sort of ventured out of New South Wales. How did that process look?
Yeah, so 3 years later, I guess in between the 3 years, I hadn't really had a plan to get into the property market again. I thought, after the first purchase, my borrowing capacity was, pretty much capped. And at the time, I still had some HECS remaining. So I didn't think I could borrow too much, but I did get a pay rise at work. So after the pay rise, I thought, okay, well, I'll go back to having a chat to a broker and just to see what my options are. And that's when I realized, okay, well, my borrowing capacity has increased a little bit, but it wasn't enough for me to really buy something back in Sydney, because Sydney had been booming quite a lot. And I wasn't really aware of, multiple markets outside of the immediate Sydney circle. Like, I wasn't really confident buying in the outer suburbs either. And so I thought, look, I don't really have too much knowledge on property investing. So I'm happy to go invest some money into a buyer's agent who knows what they're doing.
Okay.
And who does this full time for a job. So yeah, went to speak to a few buyers agents and decided in the end, based on the advice and recommendations they gave me, they said, look, Queensland is a market to consider because the yields there are good, and also the price point, given my borrowing capacity, suited what I was looking for. So I was happy to go with a buyer's agent to go buy a property in Brisbane. And actually, my family had lived in Brisbane for a year, so I know a little bit about Brisbane. I thought, okay, well, Brisbane's,
pretty familiar.
Yeah, it's a fairly nice city. And I think there are definitely good growth prospects in Brisbane, particularly with immigrants and also the weather attracting people to go there. So I thought, happy to go to invest in that area, and decided to go with a buyer's agent who was able to purchase me a property in Wynnum for $515,000. It was on around 600 square meters of land, and it was enough yield. I think it was around 4.5%, 5% yield. So it was covering, again, almost all of the expenses on the property.
Oh, wow, that's pretty amazing. And how has that property performed? I know we've heard a lot about Brisbane and buyers in that region sort of expecting growth for, over the past sort of decade, but not much has happened in the sort of most areas of the city. How's that looking now?
Yeah, you're right. When I bought in 2016, it hadn't done much really until probably only up to the last few months. So yeah, the growth was quite flat. So I wasn't really able to draw out much equity from that property either. Actually, I wasn't able to draw any equity out from the property just because it was fairly flat. So yeah, and I think in the last 6 to 12 months in particular, it has grown a fair bit, so which is good. But during that time, yeah, I think a lot of people were expecting big growth in Queensland, but it hasn't really hit that time. Yeah. So I guess what I did was kind of go back to the drawing board after the purchase in Wynnum. So I think it was in 2017, 2018, I came across a property course from Cherie Barber. So she does a lot of renovating for profit stuff, and I really enjoy doing cosmetic renovations. I like to get quite handy around the house, particularly with just, doing painting and installing some furnishings and fixtures. So that naturally drew me towards renovating. And so when I did that course, I was very keen to do a cosmetic renovation on the North Sydney apartment. And so what I did was I moved into North Sydney and decided to do a quick 2-week reno and basically just cosmetically refresh the place. It was quite a cosmetically tired apartment. It was built in the 1970s, so quite an older style apartment. So what I did was I ripped out the carpets, put down new timber floorboards. I put in some false ceilings, some LED lighting around the place, kitchen benchtop, kitchen splashback, and painted the whole place. And it just refreshed the place so much. Yeah. And from then, I was able to get more equity out of the property because I was able to increase the valuation even further. And at the time, Sydney was still going through a boom. Yeah. And I was able to go back to the bank and then draw out some more equity, which I can then purchase another property.
Oh, wow. That's pretty amazing. So essentially this, your first buy, which was sort of a lucky dip, turned out to be sort of better than the one that you purchased with a buyer's agent.
Yeah, I was quite lucky, to be honest. That's why I think people say timing's not as important, but I think timing is quite everything. Important. Yeah, timing is everything, but it is very hard to time, right? Sometimes it comes with a little bit of luck. Yeah,
exactly. So it does. It definitely does. And no one foresaw, obviously, COVID happening, and look at property prices since sort of mid last year. They've just sort of been soaring across the country, and no one could have sort of planned for that. So yeah, that's pretty crazy. But we're just going to take a very quick break, and we'll be back in a second, Jyh.
Whether you're a seasoned property investor or about to buy your first property, finding the right investment property to buy in 2021 isn't easy. Why do it alone when you could partner with award-winning buyer's agent Paul Glossop? Over the last 10 years, Paul has helped hundreds of clients build multi-property portfolios. Paul's secret is finding off-market bargains that get snapped up before the general public even gets a sniff. Interested? Head to purepropertyinvestment.com today to schedule a strategy call with Paul Glossop.
And we're back. So welcome to the Smart Property Investment Show. Today with us, we have Jyh Koa. So Jyh is a pretty young sort of property investor, but he's already managed to build a $2.5 million property investment portfolio. So we're just up to your third property now. So tell me a little bit about that. So obviously you did a quick sort of reno facelift on your North Sydney property, and you managed to draw some more equity out of that property and put that into your third purchase. So where was that one?
Yeah, so third purchase was back in Sydney. So I wanted to get back into the Sydney market because I started to see Sydney was quite flat for about 2 years after 2017. And I decided to get back into the market around 2019 because I started to see Sydney prices go up again. And I decided to buy an apartment in Brighton, Les Sands, so not too far from the Sydney airport. So that area I was quite appealed by because of the lifestyle factors. So not too far from the CBD and the airport, and the yields were reasonably okay around the mid-4s. And again, similar strategy. What I wanted to do was buy a cosmetically tired property where I could renovate it. So I bought this really old apartment that was in a low-maintained block of 14 units, I believe.
That's nice.
So it was a lower block of a low rise, whereas the North Sydney apartment was a high rise. So I learnt my lesson to try and avoid high rises and focus a little bit more on the building to land ratio. So with Brighton, it was able to give me that a little bit better. And I was able to do, again, another quick renovation on that property. I spent, I think it was around $6,000, and I was able to cosmetically refresh the whole place. Completely looks different. And I was able to get a bank valuation a month later, and it had gone up $30,000.
Oh, wow. Just because of your sort of, and you did that on your own, the reno?
Yeah, I did that on my own. I have a few friends who are in the trades. So I did get a friend to help out. Yeah. So they just did some small things like helping me out with the bathroom. So just installing the vanity, installing some just like basic bathroom accessories. Fixtures. Yeah. So not too difficult. I didn't have to spend too much money on that to get a good outcome.
Pretty amazing. Yeah. So tell me about that property. How's that sort of behaving at the moment with the current market? Is that area still sort of looking up or?
Yeah, so before COVID, it was all doing pretty well. So I was able to increase the rent on the apartments by $50 a week. So rental yield increased dramatically just by doing the cosmetic renos. But you're right, during COVID, there was a lot of vacancy in the area. So I think Brighton, Les Sands and North Sydney were hit the hardest. So I did have to reduce the rent by quite a fair bit. So both of them were renting out close to the $500 mark previously. So I've had to drop both down to around $400. So pretty big hit in terms of rent and cash flow. But I made sure that during that time, I always had a buffer to make sure that I cover for any emergencies. So I've always had this mantra where I want to have at least 3 to 6 months of savings. So that way, if I ever run into trouble, then I've got some buffers sitting there. So fortunately enough, I did have some buffers, and I didn't have to really dip into my savings too much. And I guess with interest rates dropping, I was able to lock in a good rate, and that would also improve the cash flow position too. Yeah.
And were you sort of able to negotiate, or did you need to at all, any sort of deferrals with the banks, or given that you sort of did reduce your rent, was that sort of the road that you went down, or?
Yeah, I did have that discussion, but I realized that if I did a deferral, it would actually adversely impact getting a loan. So I really wanted to continue buying in the market. So I decided not to defer, which I'm thankful for, because if I did defer, I wouldn't be able to get into my fourth and fifth property.
Okay, yeah. And tell me about the fourth and fifth. So, wow, so that's since 2019, you've purchased 2 more? So since that's the Brighton Les Sands property. Oh, wow.
I guess
tell me about that journey. That was a quick turnaround.
During 2020, I guess we had a lot of time because we were stuck at home during COVID. So
to browse realestate.com. And
exactly. That was pretty much on my favorite list in my bookmarks. So almost every day I was just looking at properties virtually and calling up agents and seeing, how the market is, speaking to agents about, what properties are coming up on the market. And I think there was just a lot of fear in general, like with the share market and also with property. So that's when I really had time to start to research a little bit more and just understanding how interest rates work and understanding how the economy works. Because I guess prior to all of this, I never really thought about how these macro trends affect real estate. And I guess COVID was a big eye-opener because we started seeing a massive influx of stimulus come into the economy. And what that really did was drive asset prices up because the value of money became lower and lower. So people wanted to put their money elsewhere and you weren't really getting a return on putting cash in the bank. So that's when I really started to realize how these macro trends were affecting the property market. So I've always had the long-term rationale of holding assets for multiple decades. I don't really intend to sell any of my assets unless I have to. So I guess I wasn't really too fazed about the short-term volatility. I knew if I was able to buy good properties now at good prices in the long run, next couple of years, 5, 10 years, 20 years, these properties will double in value over time and almost, triple in terms of the property value. So, so what I was thinking was during that time, I had a lot of time to research properties and virtually inspect them. I had a really good property manager as well who was based in Queensland. So I was looking at properties in the southeast Brisbane area, so around Logan, and the rental yields were quite impressive. So you're able to get around 6% rental yield. And with the interest rates being so low, around 2 to 3%, I was thinking this is, kind of a no-brainer in terms of cash flow and also building rental passive income. And at the time, I was also hitting a borrowing limit. So I had to be quite strategic with working with my broker to make sure that we were able to maximize and prolong my borrowing capacity by buying the right type of properties. Whereas previously, the properties I'd bought were all cash flow neutral. So we're really focusing on trying to increase my borrowing power so we could go borrow more again.
So tell me, so the fourth property, was that with a buyer's agent, did you say? Or?
No, so I think by then I built up quite a lot of confidence in the market. And so I started researching properties myself. And I was just on realestate.com almost every day. And I found some properties in a suburb called Crestmead. And so I was basically just watching the market, looking at recent sales. And a lot of the properties that were coming up on the market were selling less than what it had sold for previously.
Oh, wow.
Yeah. So I was like,
interesting.
So I was like, okay, well, these seem like decent properties and they're on big land, 500-600 square meters of land. They had tenants in there as well. So it was fairly safe from, I guess, a cash flow perspective. I bought them. There would already be tenants in place providing cash flow. So I called up my property manager and I said, look, can you help me inspect these properties whilst you're there? Because I couldn't fly to Brisbane because of the borders were closed. And so I was very fortunate to have my property manager inspect those properties and send some photos back to me. And I was also calling the agent to do a virtual video tour too. And, did a building and pest, negotiated the price, and we were able to lock in an offer. So I bought 2 properties in Crestmead in very quick succession, basically one after each other during that time, because I saw it was kind of opportunistic purchase during that time because of the market of how it was playing during COVID. Yeah.
And so are they units or houses?
They're houses.
Oh, wow.
Yeah.
So two in the same suburb.
Yeah, 2 in the same suburb. They're I think they're 3 and 4 bedroom houses.
And tell me sort of how they're performing. Are you happy with that purchase? Was that sort of a financially smart purchase, do you think?
I'm actually very happy with the purchase, to be honest. I was worried that these houses weren't going to grow because they're in, further parts of Brisbane. So Logan typically hasn't done too much in the last couple of years, and it has attracted a lot of investors into the area, mainly for the rental yields. And a lot of people question the capital growth. But I purchased these properties for low 300s last year. And this year, the valuations have come back almost at 400,000.
Oh, wow. So even Brisbane, Logan. Wow, that's pretty impressive. Yeah. So tell me sort of, obviously now, so you have 5 properties, is that right?
Yes.
And you put their value at about 2.5 million?
I think the value now is probably worth closer to the higher twos, so probably around 2.8, 2.9.
Oh, nice. And how's your sort of portfolio balanced? Is it sort of positive or neutral? Where are you
Cash
at the
flow
moment?
positive at the moment, and sitting around 70 to 80% LVR.
Oh, that's pretty impressive. So even with the sort of obviously Sydney still pretty highly impacted by COVID, your properties are still sort of yielding pretty well.
Yeah, still okay, even though after the rental decrease, I guess because of the properties of the renovations, they're still fairly good quality, I would say, compared to the other apartments in the area. So I think it's well priced and still able to attract good demand from tenants. So I didn't have too much of a vacancy issue. I think the longest that I had was around 6 or 7 weeks during that pandemic in 2020, right in the heart of the peak.
Yeah.
So I think that was the worst. I was a little bit scared then. It was like, 6 or 7 weeks of no rent coming through. But we were able to eventually find a tenant quite quickly.
Yeah, that's very lucky. But Jyh, we're just going to take another very, very quick break and we'll be back in a second.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
And we're back. So we've got Jyh with us today. Jyh was just telling us about his 5 properties. So he's got 3 in Brisbane and 2 apartments here in Sydney. So Jyh, tell me a little bit about sort of next steps for you. Obviously, last year was a very busy year for you with, the purchase of 2 properties, and then 2019 you purchased an apartment in Sydney and did a reno on that property. So what's next for you? Are you going to sort of take a break and sort of ride out this COVID storm, or are you sort of getting, ready to purchase again?
Yeah, this is a very good question. I have taken a little bit of a break for me personally, and I've been helping my partner and also my brother get into the market. So my brother has never invested in property, and I've always told him to, if this is the time, now is the time to get into the market. So I helped him purchase a property in Crestmead as well last year. And my girlfriend's also been getting into property investing. So I've been helping her kind of research the market, and we've managed to help her buy one in Perth recently. So I think if I was to invest later on, I would definitely want to get into the Perth market.
Perth's going off at the moment, isn't it?
Yeah.
It's pretty wild.
Yeah, and it was actually my first time visiting Perth earlier this year. Whilst there was COVID-free times, we were able to travel. So, yeah, I love the area. The beaches are amazing, and I think there's just so much abundance of land in Perth. And I really think Perth will actually have good growth prospects, particularly when the immigration borders open.
Yeah, and Perth sort of has that, it has the mining to always fall back on, so which is a sort of positive. We were speaking earlier sort of about the cities, and Brisbane's the only one that sort of doesn't stand out too much in terms of, because jobs obviously are a bit of a problem up there, at the mining obviously, and not too much action there either. So I think Brisbane's sort of the only city that worries people in terms of future growth. But with Perth, that's sort of it's doing pretty well.
Yeah, and I think we just got to be open and look at other markets, because Australia is so big. There's so many other states, and historically all my purchases have only been in Sydney and Queensland. So I've still yet to explore a lot more. Yeah. And the yields are still quite impressive in Perth. You can still get good properties on land and houses that will give you good cash flow, good rental yields, and good growth prospects, I think.
Yeah, and they're sort of going through a bit of a rental crisis at the moment in most areas of Perth. Not too many properties sort of available, so they are looking to draw in investors, I think, at the moment. So might be a good time to sort of, cast your eyes over Perth.
Yeah, definitely. I can tell you from first-hand experience, the property that we bought in Perth, when we rented that out, the first inspection, there was over 18 groups, and I think the first inspection, there was about 5 applications coming through. So, yeah, definitely a rental shortage.
Yeah, that's pretty amazing. So you're sort of inspiring your family to go down that road as well, property investment?
Yeah, and I also had a bit of a, I guess, professional career change too. So that's also why I've personally been taking a break, just because I can't borrow at the moment, because I've started a mortgage broking business for myself.
Oh, that's pretty impressive, yeah.
Throughout the last 10 years, I've always been working in corporate marketing. But what I really did over that last 10 years was focus on increasing my income at work so I could invest further. So property investing was almost like a side hustle for me, where I was just focusing on investing over the years. And during the 10 years that I was working in my corporate marketing career, I was able to build up that wealth. And I think, by the end of the 10-year mark, I was kind of thinking, I'm quite keen on a career change, looking to do something a little bit more different and a little bit more impactful. And I think I really was passionate about helping people build long-term wealth, particularly through property investing, and through the experience that I was able to gain through cosmetic renovations. I really want to try and help people do the same thing. So, I started my own mortgage broking business at the end of last year, and I was very grateful to be mentored by one of the top brokers in Australia. And so this year I've just been really focused on that. Yeah.
So what's your sort of long-term goal? Is it sort of, obviously now you've, property has allowed you to change careers, as you said, and open up your own business. So is sort of early retirement on the cards, or are you sort of pretty passionate about taking, your own personal company as far as you can?
Yeah, I think, look, I'll never really stop working. Like, I enjoy working as long as I'm passionate about it. I think as long as if I'm enjoying what I'm doing, I'll always find ways to work. And that's what really is most important for me, is really being able to wake up every day and feel like, I'm making an impact. And for me at the moment, definitely no thinking of retiring early. It's more around how can I help more people? And I think everyone deserves to be able to build wealth and, have financial independence eventually. And what that means for them is going to be different for everybody. Like, financial freedom is a very large term, but what that means is going to be quite unique for each person, and each person's journey is also very different too. Just because you haven't bought a property in your 20s or 30s doesn't mean you can't build wealth. So I think my goal is really trying to empower as many people of all ages in Australia to be able to build wealth for them. And not everyone needs to be living off a passive income of $100,000. Some people can live very comfortably on $40,000 or $50,000 passive income and have a very good life. So that's going to mean something different for everybody. And I think ultimately that's for us to define.
Yeah, exactly. Well, thank you so much, Jyh, for joining me today. We might have to sort of get your partner on as well to discuss her property journey.
Absolutely. Yeah, thank you so much for having me.
Thank you for sharing your story. And if anyone else out there, our audience, wants to come join me or Phil on the show, please do write to us at editor@smartpropertyinvestment.com.au. And thank you for tuning in today, and keep reading Smart Property Investment and keep listening to the show. We're going to have some very interesting guests coming up over the next few weeks. Thanks again, and I'll catch you next time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance, and no cap on existing investment portfolio size. Plus personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.